Hey everybody, welcome to the podcast. This is Sean with a Walker HT, and I am here with my amazing friend Jodi Longley from Movement Mortgage, and she is just going to let us know what is going on in the world today. So we're going to just spend the next few minutes chatting and see what's going on. So Jodi, how are you?
I am doing fabulous, and I so appreciate you having me on here.
No problem. No, I realized I was tabulating when the first time I met you. My wife and I were, we knew you back in the day. I think the first time we ever pitched a mortgage deal to you was back in 2002, maybe, I think. Would that be right? 2002, 2003? Yeah, 2002, 2003. So a long time ago, which means we're just in our late 30s. Clearly, that's what it means right there. So we talked a little bit last week. So, I mean, obviously you are well-versed. You know this industry, so well. There's no doubt about it. Your prowess, is there. So we're done. You're an expert in this field, and that's why I'm so grateful that you are on. Obviously, the real estate market, we have seen a shift. Some people are calling it a minor crash. Some people are calling it a softening. I don't care what you're going to call it. This is what I'm calling it. I'm calling it a reversion back to normal. Now, there's market circumstances that are playing into this, and some of them are not necessarily predictable. What is the Fed going to do with market rates? All of those things. But with all of these kind of different facets that are playing into the market right now, how are you seeing borrowers navigate this? Like, what is helpful to them?
What's helpful to them right now is for all of us that have been doing this forever to let them know the sky is not falling.
Yes.
We've been through this before. And
Right.
If you look in the past, I mean, it goes up, it goes down, it goes up, it goes down. Every time it goes down, there's an up.
Yeah.
And just being prepared for that. And people are scared because of the interest rates, but they're not that bad. They're just different.
Right. Well, that's one of the things that I've been talking about is like, the old schoolers back in 2001, 2002, they would always tell us, listen, rates were 10, they were 12. Now, obviously, there's different shifts and whatnot. How do you see, and I noticed there's a couple of programs, I think there's a new program that you're going to start offering soon. I'd love to hear about that. But how do you see mortgage lending shifting kind of with the market? Is it shifting at all? Is it making any changes, new programs, things like that?
Well, right now it's actually making it easier for that first-time home buyer to finally get back out there and not get beat up every time they're putting in an offer. Nice. Our VA buyers, our FHA buyers, they were just getting killed when everything was, going way above cost.
Right.
So right now we've got sellers that are wanting to sell their home, and they didn't listen to their agent and list it for the right amount. But that's okay. We do what we need to do, and they're willing to help these buyers buy down these interest rates.
Right.
And
so are you seeing a lot of that now? I mean, that seems to be the word of the day. Hey, do you realize sellers can contribute? And are you seeing a lot of that happening right now?
I am seeing a ton of it. Okay. Actually, the last 4 out of my 5, we all had closing cost concessions.
Really? So now how much, just on average, can you kind of give an example of like what that looks like? Like how actually can that help?
So a couple different ways. I mean, all of us that are doing loans right now, we're educating the buyers that this is a temporary loan because these rates are going to come back down. And at that point in time, we're going to set you up for success and refinance you into that better rate. But right now, if the sellers are willing to pay $8,000, $9,000, we can actually take that, buy that interest rate down 2 points.
Yeah.
So let's say if a mortgage is at 6.625 today, I'm just worst case scenario, we can get down to 4.625. It's going to save the borrower $500 a month.
Come on.
That's huge.
That's huge. Absolutely huge.
So
and
it
now,
just makes a comfort zone.
Well, and some of the things that I've been talking to some mortgage brokers with clients, because this is what I've been saying to clients that I talked to, months and months ago, FHA buyers, FHA buyers, VA buyers, some of those people that were not necessarily in the conversation back in the day, right? Mm-hmm. Because it wasn't as, wasn't as clean, or maybe wasn't as easy as the conventional. It's done, we got the huge down payment, they're going to do it. Now they're a part of the conversation. right? Because
Mhm.
now you have days on market sitting a lot longer. They're a part of that conversation. So for them to be a part of that conversation, and some people talking, well, the FHA streamline loans, you can or streamline appraisals. They're back in the conversation now. For me, anyway, I'm starting to think, regardless of maybe where they see house prices and interest rates, this really could be your shot because, and I could be wrong, but one of the things I think we found over the last 12 months, and again, like I said, I could be wrong, and some people might be like, "How dare you, Sean?" But I think in some cases, some people bought the house they could get in, not necessarily the house they wanted.
I completely agree with you.
Because
Yep.
you saw people, bringing cash around the back, doing all these just crazy things are just unheard of. And I feel like, as we've seen, 3 to 5 years is sometimes the average home stay. I think with the way things have been done over the last 12 to 24 months, that window could be very small. You could start seeing people who are just like, I want out of this house. We got in it. We want out of it. This is not home. It's not what it's mean. And I guess all that to say, we're over the next 12 months, I think probably going to see some motivated buyers. And I don't, I could be just rambling right now, but I'm just saying we could have some motivated buyers, that people who were not in the conversation before because there was just so much competition. Regardless, if you can get that 2% buy down, this is your time.
I 100% agree. And
Yeah.
as people were looking for rentals here in the last six,
Yeah.
7 months, they the rent was stupid. So it was better
Right.
to buy a house and put money towards something
Right.
rather than not putting it toward anything. So I
Right.
think we're going to see maybe people leaving this house that they got into, renting it out,
Yeah.
creating some financial wealth for them.
Yes.
And if they're not refinancing, buying a new one,
Yeah.
and values are going up. They're
Yeah.
they're not they're not dying on the limb like everybody
Right.
seems to think.
Right.
And the forecast is, values will go up four
Yeah.
to but three and a
100%.
half to 4.5% in the next 3 years.
Yeah. So it's still, I mean, and you're absolutely right. That's what, create it or turn it into a rental, create opportunity. So there really is opportunities out there. Speaking of opportunities and kind of things shifting,
Hmm.
I'm starting to hear, and I'm sure you are, knee deep in the trenches of this as well, a lot of interesting new types of programs coming out. Like I said, I don't know how new per se the 40-year is, but it's starting to gain some popularity. I remember some of the ridiculous loans that happened way back in the day, but that there are loans that are really incentivizing and helping people. So what kind of things are you starting to see out there?
Well, we call those back then it was called subprime, but now we
Yeah.
call it non-QM.
Okay.
So there's a difference between a qualified mortgage and a non-qualified mortgage. So the qualified mortgages are your regular, Fannie Mae,
Right.
conventional, all of that wonderful stuff.
Right.
The non-qualified are one of the main reasons why the CFPB brought that term out was to make sure that clients were not getting into those bad loans like they did in
Right.
2004,
Right.
5,
Right.
6, and 7.
Right.
But one of the terms to be a non-qualified is to be a qualified mortgage is that the term is not more than 30 years. So you're
Okay.
right. This
Right.
40-year term has come out,
Right.
but it's kind of a teaser. It's kind of like, saying you have something for sale, but you don't, but you're going to upsell it.
Okay.
So
Okay.
these people are coming in thinking, oh, my payment's going to be lower. Great. But the problem is your interest rate is going to be double.
Right.
Actually, I priced one out today and it was 15% down, 10.5% interest rate, and 40-year term. But you have to jump through hoops, and you're
Right.
dealing with an investor. And yes, we do have those investors.
Right.
We have
Right. For sure.
20 other investors we can actually send loans to.
Right.
But there is a negative. The
Yeah.
big thing why we don't like that program is those clients that may think, oh, I'm going to refinance in the next year and get that lower interest rate. They're not going to have enough equity to be able to
Equity.
do it,
Yeah. Totally.
because when you
Totally.
when you take that term out longer, you have less going to principal.
Yep. Yeah.
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 So it's out there, and I just hate that people are thinking, oh, this is a great loan. Just
Right.
make sure you're contacting that mortgage professional,
Yeah.
the expert, and walking you through the options.
Just call Jodi. She'll set you straight. Don't worry about it. She'll keep you out of that. What was what was the one? There was a loan. I don't even know how long that company stayed in business, but I remember there was a loan, World, what were they called? They were called World, and they were a negative amortization loan. And I tried to research it to understand it, and I gave up about halfway through because I realized there's no one that's going to be able to understand it. It was a neg-am loan, and it was literally because they thought values were just going to continue to shoot through the roof, and so they were selling this neg. I think that company only lasted a year, and then they disappeared. So
that was actually the pay option arm.
Right. So that's why we have Jodi's in the world. She'll take care of you, make sure you don't touch anything like that. So, and that's what we're finding too, is just getting educated, making sure you're connecting with a professional, making sure you're connecting with an agent who will walk you through all the negotiating process for agents right now. And this is one of the things that's interesting that I'm finding about the market is, and I don't mean this as a negative, I'm just saying this is, in the last 2 years, you really didn't need a whole lot of negotiating skills. You just needed to make sure you had a pin that functioned because things were happening so quick. Offers were coming in so fast, and it was like, okay, what's the biggest number? Yes, this makes sense. They look like they're going to close. Sweet, we're done. Understanding creative financing, understanding and having relationships with mortgage brokers who can navigate that for buyers and sellers, and having a real estate agent that can also help navigate with that conversation. It's more important now than ever. I'm just saying it's more important now than ever. This is more than just being able to find a good pin and make sure that your calculator is charged. I mean, this is really, really a time where just understanding the market, understanding where things are going, understanding, the pros and cons of locking and when not to lock, all of those kind of things. So I really do think that this is a great season for professionals who are educated and solid in what they're doing in the real estate and mortgage market. So I'm really grateful for people like yourself who are just, you understand it, you know it, you've been in the business forever. And so it's great, just to, know you're there. I know, Walker Home Team, we are grateful that Jodi Longley is alive and on the earth. So how do people reach out and find you if they need to?
Cell phone, website. I mean, I've had the same cell phone number for 20 some years. And it's, in fact,
I will go ahead. I will throw this all up after the podcast. I'll make sure that I throw all this up. So okay. So what's your website?
It is www.teamlongley.com.
Teamlongley.com.
Yeah. And the cell phone number is 253-431-8011. And
awesome.
the big thing is to reach out anytime, any time of the day, because you don't want to go online to pull up those questions and you don't get charged to ask the questions.
Right.
So it's reach out. The more we can educate and tag team that teamwork for these buyers, the more people are going to start creating their financial wealth.
Love it. Love it. Okay. Last thing before we go, what is the number one question you've been asked lately? Now I'm putting you on the spot now. So what's the number one question you've been asked lately?
Are rates going to go up? When are they going to come down?
And you say, oh, I've got it down perfectly. I can tell you exactly. Here's my crystal ball, right?
I have that crystal ball. I'd be a millionaire.
Right. What a day. And what a day today, too. Who knows what's going on? Well, Jodi, it has been awesome. Jodi's going to be one of our mortgage brokerage teams that comes on once a month just so we can just talk to her about what is going on and get her insight as well. We'd love to get it from multiple places here at the Walker HT. But like I said, she's one of the best. So you want to reach out for information, check her out on the website. And thank you guys for tuning in. We will see you next week.